please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Well, back home on Dalal Street, the Nifty breached the 10,650 mark to end with losses of about 0.5%. The Sensex tanked over 200 points, while the mid-caps mildly recovered in the last hour of trade to end just shy of that 19,000 mark. Banks were the biggest laggards in trade yesterday, with the index dropping more than 350 points. But how the Qs stacked up for trade today? Sonia joins us early this morning with more on that. Sonia, good morning. Over to you.
Hi Anisha, good morning. Thanks for that. Yes, the volatility in the market has definitely risen. As you said, the Nifty has snapped its 3-day gain. In fact, you know, this 10,700 level, which is the 200-day moving average on the Nifty, has proved to be a big resistance, a big hurdle on the upside. And most traders indicate that that could continue for a while. We have some negative global cues as we wake up this morning, so that doesn't make things any better. The Dow at one point in time was down almost about 450 odd points. It recovered a bit, but is still down about 390 points or so. We have a lot of political turmoil across the European markets. The Italian index was down about 2.5%. All of Europe was down. The euro dollar has fallen to its lowest level in a year. So, you know, all of this could put pressure perhaps on global markets, including markets like our own. FII sold about 407 crores in the cash market yesterday, and it's financials across the globe that have led the fall. So even in the US markets, you had the likes of Morgan Stanley, JP Morgan lead the fall across European markets as well. For our own markets too, the Nifty Bank has been underperforming its peers. Remember yesterday, ICICI Bank and SBI actually contributed about 200 points to the Nifty fall. So maybe that could continue. The only saving grace is that crude continues to, you know, come off from its highs. So now it's trading at around $75 a barrel or so, as we understand from reports that the OPEC is all set to ease the output caps. So maybe this little bit of respite, but otherwise global cues are quite negative as we head into trade today.
All right, Sonia, so not looking too good, but Sonia is in fluorescent green this morning. Sonia, what about stocks we're looking at?
Well, don't go by the color of my outfit. I don't think it's going to work out that way. But in terms of results today, it's a fairly, you know, heavy day for some of the PSU companies. So there's ONGC that comes out with its numbers. There's SAIL that comes out with earnings. Even in the non-index large caps, you know, some of these names, Apollo Hospitals, Berger Paints, Alchem Labs, etc., to come out with numbers. So keep an eye out on that. You do have Jubilant FoodWorks. Yesterday, CNBC TV18 exclusive sources indicated that promoters are looking to sell about 10% stake to institutional investors, although the company has denied it. So let's see how that plays out. Fortis Health, once again, that saga starts again. The bidding process has reopened and the binding bid should be submitted by the 14th of June. So that's another thing to look at. You have Bank of Baroda, where the company is sort of looking to sell about, about 3,000 crores of its NPAs or so, and a couple of result reactions as well is what we're looking at. BEL was weak, below what the street was estimating, and a couple of others like Dish TV as well will be in focus today. Back to you.
Now, Italian markets have been in focus overnight, and in fact, in the last couple of trading sessions as well. The big question is Italy the new Greece? Lata joins us this morning to explain the impact of what's going on in Italy on the global markets and, in fact, the ripple effect here as well. Morning, Lata.
Good morning. First up, what exactly happened? Italy had elections in March, where, as always, about a dozen parties won, and a very fragile coalition of 6 parties were put together. And what was common to all of them were they are Eurosceptics. And the president, of course, is not. He's a Euro sympathizer, and he has to invite the prime minister. The finance minister whom the coalition presented was Euro Paulo Savona, who is an 81-year-old economist who was famous for his plan B if Italy exits the euro. That is his claim to fame, and hence the president rejected his candidature as finance minister. That started the crisis. There was no government. If the finance minister is not allowed to be sworn in, the government itself falls. And over the weekend, Italian parties decided, those 6 parties, Eurosceptics, decided that they will not form a government. So at the core now, there is a prime minister designate, Carlo Cottarelli, who is an ex-IMF guy and very clearly a Euro sympathizer and, much favored by the Brussels regime. Okay. So at the heart of the crisis is are we in euro or are we out of euro? That's become the point, and it's not possible for the Prime Minister designate Cottarelli to continue because he does not have any majority. He cannot get anything passed, and therefore chances are of a snap poll. And in the snap poll, the opposition parties, the 6 of them, are going to raise the importance of getting out of euro as a possible election rallying point. It is going to become a make or break in euro or out of euro, anti-euro or pro-euro kind of election. That is the fear that most people have. So at the moment, it's only the rhetoric towards it that's building up, and already in the rhetoric you can see the impact on all asset classes. First, the Italian bonds. Italian debt is huge. The government has 130% of its GDP as its debt. And so immediately, if euro is in danger and if Italy is moving out, what do you attack? Italian bonds. Nobody wants Italian bonds, and the yields went over 2%, which is a very important watermark for Italian bonds. And once the bonds crash, what do you sell next? You sell Italian banks because they own all the bonds. Yes. And once Italian banks crash, then they have, relationship with banks all over the world. And so you saw banking stocks up to SBI and ICICI, banking stocks all over the world. Morgan Stanley, JP Morgan, you name it, all of them have crashed. So first, just in Italy, it's about a 3% fall in early morning. It came down to about 2.6 by end of day. All the European indices fell by between 1.5% and 2% in early trade and settled up somewhat there. All of them have fallen over 1%. The contagion spread to the United States as well. Now, the big center of the crisis is the euro itself. Euro fell. If it's an existential crisis for euro falls, and therefore dollar rose. Dollar index went almost to 95. And once dollar rises, everything that you buy against dollar, like the Indian rupee, fall. So that's why you saw the big currency fall. Emerging market, once the dollar rises to 95, EM currencies and EM equities are the first ones that people sell, and that's what you saw. Now the question we have to ask is, will this continue for a second day? Usually it doesn't, but we'll have to wait and see.
Okay, so the ripple effect in Italy having an impact on the currencies as well as the equity markets across the world. That's one developing story that we'll keep an eye out on. But moving on then, 3 years ago in April 2015, Prime Minister Narendra Modi launched the Pradhan Mantri Mudra Yojana. The aim of the scheme was to provide loans to up to 10 lakh rupees to non-corporate, non-farm, small and micro enterprises. Now, after completion of 3 years of the scheme, Prime Minister Modi interacted with beneficiaries of the Mudra Yojana. He announced that about 6 lakh crore rupees has been disbursed in form of loans to about 12 crore beneficiaries. Shireen Bhan actually caught up with SBI Chairman Rajneesh Kumar to find out the quantum of Mudra loans that were disbursed last year and what percentage of that actually turned into NPAs.
Last year we disbursed 28,500 crore worth of loans. So we always look at the NPA number from percentage perspective. So the percentage is 5.2%, and considering that many government-sponsored schemes had earlier NPA percentage of as high as 25 to 30%, then I would consider that it is in line, in any case, with the normal SME lending which bank does.
Well, after reporting a loss of over 3,000 crores on the back of a sharp spike in bad loans in the quarter gone by, Bank of Baroda is stepping up the efforts to clean up its books. Ritu Singh joins us with more on that. Ritu.
As has been the case for most other public sector banks, even Bank of Baroda reported a sharp spike in bad loans and a resulting loss in the quarter gone by, and therefore the bank is taking steps to ensure that it brings down some of its gross non-performing assets. So now we understand that Bank of Baroda has put a non-performing asset portfolio of close to 3,000 crore rupees on sale. So it has invited expressions of interest from various agencies, banks, ARCs, etc. to come and buy that portfolio. That total portfolio that I said is close to 3,000 crore rupees and includes accounts such as GVK Coal Developers, Lanco Resources, Aban Holdings, GTL Limited, JBF, Rolta, Anirudh Aluminium. Some of these accounts are also featured in RBI's second defaulter list to be sent to the NCLT. So clearly here's the bank trying to clean up its books in some of these smaller accounts where, it sees lesser recovery. It is trying to sell off now. Why this is significant is because all of these accounts put together form, over 5% of the bank's current total gross non-performing assets, which is why, which currently stand at 56,480 crore rupees as of the last quarter. So the sale of these assets will help ease some of the pressure on the bank for sure.
Okay, thanks, Ritu, for getting us all that information.